Assalamualaikum and hello. My name is ALYA binti ROZI and my metric number S52545. My group will present about Yongtai Berhad, which is a property development company. Yongtai Berhad has 10 subsidiaries and 1 sub-subsidiary, and their headquarters located in Malacca. This company mission is to build a YTB legacy that will endure for generations by delivering quality innovation and strategy, yet thoughtful product that instill a sense of ownership and pride in the community. Meanwhile, this company vision is to develop Malaysia's most successful must-visit culture and tourism township prime for a global market with its innovative concept and worldwide network, forming a cohesive ecosystem of the value of sustainability.
Significant accounting policies and standards related to Yongtai Berhad are MFRS 116 Property, Plant and Equipment, MFRS 102 Inventories, and MFRS 15 Revenue from Contracts with Customer.
First is MFRS 116 Property, Plant and Equipment. The goal for this standard is to define the accounting treatment for property, plant and equipment, so that users of financial statement can understand information regarding an entity's investment in property, plant and equipment, as well as changes in that investment, as the companies will acquire more factories for production activities or even buy more machinery and equipment for development activities. Next is property, plant and equipment are intangible items that are held for use in the production or supply for goods or services, for rental to others, or for administrative purpose, and are expected to be used during more than one period. The items have their own useful life that are expected to be available for use by an entity. So, this standard is related to Yongtai Berhad because the company needs to distinguish between land that is for development and the land that is non-current asset under property, plant and equipment.
MFRS 102 Inventories has defined inventories as asset held for sale in process of production or still in the form of raw materials. In the case of property development business, inventories are included of raw material, work in progress or unit under construction, and in-house stock which is completed unit but not yet sold. Inventory for property development then will be disclosed in financial position as current asset. MFRS 102 inventories indicate that property development costs comprise of all costs contributed or on any reasonable basis related to the development activities of the project. These costs then can be divided into 3. First, costs associated with the acquisition of land. Second, direct and indirect costs incurred during the construction, such as professional fee and infrastructure work. Third, costs attributable to the development activities and can be allocated to the project units. For example, warranty costs and borrowing costs.
So basically, MFRS 15 Revenue from Contract with Customer stated that a contract has commercial substance such as risk, timing or amount of the entity's future cash flow that are expected to change and can be accounted for by the company. A company recognizes a contract with customer if criteria are met in which the parties to the contract have approved the contract, whether in writing, orally or by other customary business practice, and are committed to performing their respective obligation. The promised goods or service to a customer is distinct if the company met the criteria, which are the customer shall benefit from the goods or service either on its own or together with other resources that readily available to the customer, and the entity's promise to transfer the goods or service to the customer is separately identifiable from other promise in the contract. A company should recognize revenue when the company satisfies a performance obligation by transferring a promised good or service such as an asset to a customer.
Next, we move to the types and classification of the choosing accounting policy. Yongtai Berhad develops a diversified market that provides both goods and services. This company sells luxurious property and provides services such as providing venue space for all kinds of events, such as backstage services, catering services, and organizing local and international projects of the highest qualities. PPE under MFRS 11C states that there are many types of depreciation methods to allocate the deprecable amount of an asset on a systematic basis over its useful life. Yongtai Berhad used methods such as the straight line method, the diminishing balance method, and the units of production method to depreciate its asset. First is straight line depreciation method. It is a continuous charge over the useful life of the remaining value of the asset. It will result in continuous charges over the useful life of the remaining value of the assets and expenses the same amount each year. Second is the diminishing balance method. Depreciation is charged at a fixed percentage on the book value of the asset. It is also means decline or reduction. So, a diminishing method means a declining or reducing method. Third is the units of production method. This method will depreciate the asset based on the number of units it's produced rather than the number of years of useful life left. Assets in the financial statements of Yongtai Berhad are depreciated at the annual depreciation rate, but freehold land is not depreciated, and also construction related to PPE that are not depreciated until they are ready to be used.
Yongtai Berhad had classified their inventories into two types. The first one is property development cost. Included under this type of inventory cost is cost of material used in development project, interest expense, and cost of land. Second is goods held for sale. This in-house stock involves finished project units but not yet sold to the customer at the end of the period.
Next, we will move to the classification of MFRS 15 revenue from contract with customers. This standard used to classify performance obligation, whether as a single performance obligation or a separate performance obligation. The amount of consideration promised by Yongtai Berhad in a contract with a customer may include a fixed price or variable price or both. Yongtai Berhad need to present the contract with customer in their financial statement as a contract asset or contract liability, depending on the relationship between the company's performance and the customer payment. Moreover, the control of the asset may transfer over time or at a point in time depending on the term and law applicable in contract.
Recognition and measurement of the chosen accounting policy.
On initial recognition, the items of property, plant and equipment are recognized at cost that includes purchase price as well as any cost directly attributable to acquire the asset. After the initial recognition, items of property, plant and equipment are carried at loss at cost less any accumulated depreciation and any accumulated impairment losses. In order to depreciate, Yongtai Berhad applied an estimate method. In the selection of the depreciation method, the useful life and the residual values.
For the recognition and measurement of property development cost, the cost of land use, related development cost to the project, and direct building cost less cumulative amount will be recognized by the company as expense in profit or loss statement. The company recognizes both the freehold land and leasehold land as inventory under property development cost. Some of the land under the name of joint venture also will be recognized as property development cost depending on the assigned right written under the contract. For any project still under development, it will be recognized as property development cost in financial position before subsequently recognized as an expense in profit or loss after the transfer of control over the inventory to their customer. Any unsold unit will be transferred to the complete development units once development project is completed. Yongtai Berhad stated their inventories for the year at the lower of cost, which is amount at which it can be sold, and net realizable value, which is expected selling price less cost to make the sale, such as completion, selling and transportation. Cost is determined using first in first out method. For any finished development unit, the cost would comprise the original price plus any incidental costs incurred in bringing the inventories to the project location or store.
I'm going to tell you about how Yongtai Berhad recognized their revenue from the contract with a customer. Yongtai Berhad recognized a contract with their customer as separate performance obligation because it includes multiple promise to customer. Each of the performance obligation transaction price shall be allocated by Yongtai Berhad based on the stand-alone selling price. Anyway, if Yongtai Berhad cannot observe their performance obligation directly, this company will estimate based on the expected cost plus margin. Yongtai Berhad measure their revenue from property development at a fixed price that is agreed upon under the sale and purchase agreement. Other than that, this company will recognize their revenue from property development when the control of asset is transferred to the customer, and it is possible for the group to collect the consideration from the customer. When the control of asset transfer over time, revenue will be recognized throughout the contract by the reference to the progress towards satisfaction of that performance obligation using the input method. By the way, Yongtai Berhad also recognized their revenue at a point in time for the sale of completed properties when their customer obtain control the properties and the properties have been completely done by the company.
In revenue and cost recognition from property development activities, this company used the percentage of completion method. This method is determined by the proportionate that property development costs incurred for the performed to that pair to the estimate total property development cost. In order to determine the percentage of completion and gross profit margin in development activities, the company needs to determine the extent of property development costs incurred and the total estimate cost of property development. This part is require a significant judgment that make management to rely on past experience and the work of specialists.
Yongtai Berhad, as a development properties company, recognized contract asset after the company settled their obligation under the contract with the customer, but not yet bill the customer. It will be transferred to trade receivable when the payments seemingly would not be performed in the current year period. The company stated the contract assets at cost less accumulated impairment loss if there is any. In the case of contract liabilities, Yongtai Berhad will recognize the advance payment including the down payment received from the customer for the unsettled contract obligation. The contract liabilities are recognized as revenue only after the company performs obligation assigned under the contract. From our evaluation, we conclude that Yongtai Berhad complies with applicable accounting standards under Malaysian Financial Reporting Standard MFRS 116 Property, Plant and Equipment, MFRS 102 Inventories, and MFRS 15 Revenue from Contract with Customer. The company disclosed all the information involving judgment, estimates and assumption of the property, plant and equipment, inventory and revenue from contract with customer in their notes to the financial statement.